We are so back. That is the theme of the day. I'm here with Mike Grain of Salt, Tim Kotzman, Tyler Rowe here in the saddle. Big day, big 24, 30 hours, guys. Bitcoin's crushed through 71K. Strategy was up 20% over 2 trading days intraday. ASST, other treasury stocks are just ripping. SATA, the digital credit instrument, is back and firing. If you look at our little tracker here, you can see that they've already are estimated to have printed about enough to buy 31 Bitcoin. So, probably $2 million plus of ATM proceeds by our latest calculations. We're 5 cents off par rate at the moment, but how are you feeling, boys?
This is awesome. This is something that we endured for the past. Well, things were looking good back in mid May, right? Bitcoin was about 82,000, and then since mid May, everybody was it was a bummer, and now things are much better. It's amazing how quickly things can turn.
Yeah, I mean, Tyler, I'm in Central Park in Manhattan, and I can tell you, it's so hot, I can't even wear a suit and tie. It's Bitcoin summer. We're back.
I mean, the takeaway here is that I've received a lot of messages, a lot of DMs from people saying, thank you for being a steady hand while we were going through this, for being positive, sticking to the metrics. One of the things that I saw online, and I've stopped going to a lot of spaces. If I go to a space, I do it anonymously now. And I think one of the things that they should do is guard their time. Be careful if you're on spaces and there are people on there that are a bunch of clowns. Do not waste your time on it. It's not entertaining. It's not a good use of your time. I mean, if you think it is, then so be it. But the reality is that if you're looking for real information, there are people to follow, and you know follow them, and they'll talk about metrics. They'll talk about narrative. They'll have a mix about where things are going, and they have contacts in the industry. And other people are just like a lot of personal attacks. Oh, I didn't go this way, so I'm pissed at the world.
Yep. Certainly a lesson, in bear markets when sentiment's down. Yeah, it's easy to have people steal your joy, but here Bitcoin is having one of those days that don't come that often. Maybe a couple times a year we get this kind of euphoria, but just yeah, big time moves. Tim, before the show we were talking. It felt like we were, definitely at a bottom. Sentiment was down. Eyeballs everywhere were down. Engagement was down, and here we go. Could we still chop sideways from here? Maybe, but I think the with some of the moves that with the Treasury signaling, that they're going to be more aggressively buying back longer duration Treasuries. Liquidity is opening up. We still have a ton of money sitting on the sidelines in money market funds. So I always joke that I view that as a reserve for Bitcoin. Money in money market funds is a reserve for stocks, equities, Bitcoin. That money's coming in eventually. Yeah, it'll be interesting to see where we go from here. But it's nice to have these wins, these good days, and to see the Bitcoin accumulation machine back at it. We've got Parker White from Apex, who just dropped in. We've been celebrating that the Bitcoin engine's starting back up on SATA. They hit par, and we think they've hit the ATM to the tune of a couple $1 million already. How are you feeling, Parker?
Good. Did you guys see, just jumping right in, did you guys see there was a 110,000 share 1 minute candle about 30 minutes ago, which was half of their volume yesterday and more than like their total daily volume on a number of days earlier in the week. So I don't know if that was them with the ATM. I know they said they weren't gonna, run the ATM super hard. They want to crush the shorts. And the borrow rate's still like 30%, but um, I don't know. It's bumping around here right at 100. It might be too tempting to not run it and start buying again.
Yep. Yeah, it will be interesting to see if this thing can keep tagging par today, which I do expect. If Bitcoin's price continues, to even chop where it is or run up more in the next 24 hours, yeah, it's got to be pretty tempting to run the ATM. What's your feeling? You talk to the guys at Strive every week on the hurdle rate, Tim. What do you think? What do you make of what the team might be thinking right now?
I mean, Matt posted this morning that it's time to bump up the amplification, and there's lots of memes, right, where people are just pushing up the volume in the replies. So I would tend to agree with Ed Julien posted yesterday. If the U.S. government buys Bitcoin, aren't they just copying strategy but with T-bills instead of preferreds? And I just replied, I'll allow it.
Yeah, it's I mean, this has to be signal as well, right? Let me just put a tweet up here on the screen. Matt Cole having some fun with the AI videos, but he says the SATA printer has been reactivated. So I think that's probably the signal we need right there, Parker. That they're not going to let this thing run up above 100. I don't think. Um, so yeah, pretty interesting to see.
Yeah, and it's interesting. Spent a little time with our team talking about the borrow rate, and it's potentially just some derivatives dealers who maybe hedged out exposure to some derivatives that were sold, maybe OTC. The open interest on the lit book is not particularly strong enough to support that much in short interest, but maybe there's some OTC stuff that was done. And in that case, these guys are happy to hold and pay whatever because they built it into their pricing on the derivative. And then it was just whoever's on the derivative side got their face smashed. So, there may not be like a squeezing out of the shorts because these guys might be fully hedged and you just need that derivative position to roll off if it's like some kind of option. So I think potentially the right call to just start, running the ATM and, not bothering with the shorts at this point. Because if they didn't cover now, I don't know. I don't know if they're going to be covering.
Yeah, it's a dangerous game, like shorting. I think any of these instruments for anybody when Bitcoin's ripping, right? You're just asking to get your face ripped off. Yeah, this Fintel, I don't know how up to date or accurate the metric is here, but it showed the short shares available were just 200,000 shares of SATA, which is
Yeah, I like to
interesting.
use iBorrowDesk. I don't know if you've seen that one.
Try to pull that up here.
So iBorrowDesk, there you go. And then just punch in SATA. And so you can see this is just a Interactive Brokers API, but Interactive Brokers is pretty well connected. So you can see the shares available just spiked. But the borrow fee is still pretty high.
Right.
So this seems to maybe track Fintel pretty closely. But it also has the fee in there, which again, this is an estimate. This is not the whole market. This is just one broker. But it's, what I like to use to kind of track real time. Yeah.
So I think this is the reverse of what you guys. I just want to make sure we're all on the same page here. If the borrow shares available go up, that means people have covered their shorts and given back those shares. That's the way I would look at it. It's possible.
That's right. Yep.
Yeah. So right. Okay. I just want to make sure people are understanding this. That why would you go short something that's at par, right? Because you have to hope that it goes down, and the fact that it did the full recovery. Like the time to have short it, as the trend was, it kept on going down because then you could rebuy the shares at a lower price. It makes no sense to short it now, specifically at 32%. I mean, plus you're paying, the dividend on top of it. Now,
yeah, well, actually, there's a pretty strong incentive to short at par because if they're going to run the ATM and they're never going to let it go above par, then you're protected as a short. It can't go above. So you're not going to see a situation where it's at 110 and you've lost money as a short. So it actually makes a lot of sense to short at par, except for the borrow fee at 32 plus 13 you got to pay. So you're at like 45%. Like you got to hope it goes down quickly or you're losing money.
Yeah,
Um,
it not only is it 45%, but it also pays daily. So you have to cover that. So so not only is that rate considered to be an APR that we're seeing right here, is that you have to pay out that dividend every day back. So this is the weirdest thing. I just want the way that I see this, this is weird. What I would say is that this is what SATA has proved to be is the word is durable. You do not hear this word. Sometimes we hear the word anti-fragile because it's associated with Nicholas Taleb and a black swan event. I do not think we had a black swan event, but I do think that we had this major correction that kicked in. And then what's happened is SATA has gotten back to par. So if somebody is like, oh, well, there's going to be a death spiral, durable is the opposite of a death spiral. And I think the fact that we proved that it got back up. We're going to see the same thing with STRC. Just the timing just matters. So with that said, I think that these products, worked as designed. Did we like the volatility in it? No, but I think that's why we're going to see more and more cash raised.
well, and I think Saylor, the advertising was always, hey, if you need your cash in 12 months, 6 to 12 months, these are good instruments. He didn't say if you need it in one day. And Bitcoin's too volatile. 6 to 12 months, it's down 50 whatever percent. But Stretch is on its way back, and if you've been holding over the last 6 months, you're positive already on your position because you've been collecting yield along the way that covers the 5% drop. Um, so, it's still true to the marketing. Like, this was kind of by design, and a lot of people have cash sitting around that they don't need for the next 6 to 12 months. Like, might as well park it here than in a checking account or a money market.
So can I do a quick car analogy since we're all dudes?
Park.
Tim, you're coming in all garble.
Go ahead, Mike.
Yeah, so this is the car analogy. Let's assume you're in a car, and when I get into cars, and people are like, "Oh, look at this dashboard! It's this big screen in front of it. It's really wide." And everybody's like, "Oh, isn't this cool?" I'm like, "This is the worst idea in the world." And they're like, "Why would you say that?" I'm like, "I don't want the passenger to see the speedometer while I'm driving." So in my cars, there's like a hood around, from the factory, and the speedometer. Like if you're in the passenger seat and you look over, you can't see it, right? If you're a dude and you're driving, the last thing you want is somebody next to you being like, "Oh, I don't like you going that speed." So what does this have to do with Stretch or SATA or so forth? I would guess that probably for all other fixed income products, except for Stretch and SATA, you have no idea what the speedometer is saying. You just don't. There is zero transparency in there. What's happening mark to market and the value of that bond. You know that you're going to get your payment, your dividend payment or your coupon, but unless there's a price that's being shown every 15 seconds, you don't see that. So this is where Stretch and SATA kind of like they had this massive transparency, but people didn't have any transparency with the other products. So, for instance, if we did not have mark to market with Stretch and SATA, you didn't know the price of it, but they just kept on paying out the dividend yield, you'd be like, oh, everything is great. But because Bitcoin updates, every second around the world, 24/7, you can actually see this. And that's the part I want, to get across here is that sometimes it's better if you just don't know something because knowing the cash position is great. So hopefully that analogy made sense. But that's the part I'm trying to say is that everybody's like, well, we have this, we can handle the transparency. This goes back to what you said, Parker. It's like, yeah, but they couldn't handle the volatility. Now, the volatility should have been in theory less, but I think these products are now battle tested, especially when STRC gets back to par. People are going to be like, well, I should have bought the dip. I mean, that's going to be the statement.
Yeah, couldn't agree more.
Yeah. I mean, what a wild total return on a credit instrument, right? To STRC, if you bought it like, the lows in the 70s to be able to return 33% plus collecting the interest payments along the way. Same thing with SATA in the 70s, 30+% total return while collecting daily dividends. That's just hilarious in a credit product. And I guess what's your sentiment on do we have these same kind of tests again in the future when Bitcoin's price gets tested? Will it rhyme? Will it look the same? Or what do you think the market might have learned from this last drawdown in digital credit?
So I think the challenge is always leverage. And I know lots of the Bitcoin guys like to shout at the DeFi guys and say, "Oh, you injected all this leverage," but that was not what happened here. This was just plain old TradFi margin leverage. Um, and so the problem with an instrument that's designed to be, non-volatile is that leverage creeps up. I mean, this is happening in the treasury market right now. Like, this is why Treasury is buying back, um, treasury bonds, is because like people are breaking, because lots of funds, banks by design are mega levered treasuries. And so, um, you'll go through these periods of calm and leverage under the surface will be slowly ratcheting up, tick, 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 tick. Because if you're like, hey, look, this thing's going to pay 12%, 11%, whatever it ends up being, and there's no volatility, well, I can put a turn of leverage on that and crank that up to 17% or 18% or two turns of leverage, 23% or whatever. That's pretty juicy. And so no one's doing that right now. No one's batshit crazy enough to do that, but people will forget. Leverage will float back into the system. And so you kind of need these events to like clean out the leverage. If there was no leverage ever, then I don't think these events would occur. Um, but I think in the future, you probably will see more dip buyers step in because they recognize what's going on, um, and that this is not the end. This thing is not going to break. It's just going to bend. But I think it's going to unfortunately just continue to happen because there's leverage and you can't stop people from having, adding leverage. You just have to let the market teach them their lesson. But probably I would assume for the next 6 to 12 months, we're kind of going to be in the clear for a while. And it'll take this thing growing, maybe double in size, Stretch in particular, before new leverage is really entering that, kind of forgot the lessons that we just learned now.
Yeah. Am I frozen on your guys' screen as well?
You're
Yeah.
frozen.
Yeah, I'm gonna refresh. Keep it going.
Yeah, so I'm going to share my I'm going to share a screen here. Give me a second. So leverage is something great to talk about, and strategies dashboard. Can people read the dashboard? And sometimes they can't, and that's why I like showing this. So strategy has not, in the past couple of days, they have not raised more cash. That cash was announced on Monday. So the cash is at $4.8 billion, and you see it here in the lower right-hand corner. What continues to happen is the net leverage continues to drop. And the reason why the net leverage continues to drop is because the BTC reserve goes up. Now, because the BTC, the reserve over here is, they call it the reserve, um, is that because this is such a big number, even if it goes up by $1 billion, it doesn't really move the leverage down as much as you think in percentage terms. Really moving the net leverage down comes from them raising more cash. It's just the way, because Bitcoin's such a big number. So from that perspective, as the price goes up, two things are happening. The net leverage is going down 3.23%, and the amplification has dropped. This number used to be over 1.56. And what happens is the price of Bitcoin goes up, leverage has gone down to 1.39x. So one of the things that I hear in spaces all the time is that, well, strategies they're going to have billions and billions of dollars of stretch payments, and they won't be able to afford them. For some reason, these people do not understand ratios or percentages, and what strategy is going to do is they're going to keep amplification in a range of between, making this up, and I've already posted this, between 1.3 and 1.6. So once STRC hits $100, they could then amp up amplification because they will buy more of the magical Bitcoins. Saw what I did there, Tim? And so that's when amplification will go up. So as the price of Bitcoin goes up, they get more de-amplified. And then STRC will hit par. So what I think they're going to do on Monday is they're going to say that they sold MSTR, and we will see, I don't know, more than 500, maybe $1 billion in cash. They will get the cash to probably close to $6 billion by Monday. And people will be like, why'd they do that? Because they wanted to de-lever the company. So I think they'll do that. And maybe they'll also throw out a number, $250, $500 million worth of Bitcoin. So maybe they'll do both, buy Bitcoin and cash. The other metric that becomes really, really interesting is on the credit page. And let me blow this up. So on the credit page, in the upper right-hand corner, the BTC reserve is 60 billion. So that's the BTC reserve. The reserve includes cash on top of it. So the BTC reserve is $60 billion, which means that if Bitcoin never went up, they've got 35 years of duration. But nobody likes that because they would have to sell Bitcoin in order to do it. What's the more important number is the BTC ARR is now 2.84%. You're like, what does that mean? That is the average rate of return, ARR, for Bitcoin has to go up in order for them to service the dividend payments in perpetuity. And people are like, Grain, you're wrong. That calculation's not right. They have to pay, 10, 12% on the prefs in order to cover that. And I'm like, no, because you're not accounting for the size of the BTC reserve. That's the part that people just don't get. It's what percentage of the reserve that they have. Like if your net worth is 0 and then you're borrowing against it, then yeah, whatever that percentage rate you're borrowing is, that's the real rate. But if you make the numbers smaller, right? If you have $600,000 in net worth and you're borrowing, but it's only 3% of what you're borrowing, you're under levered because you have 600 grand. They've got, the percent always stays the same. I mean, it will move up or down, but a percent is the percent. So with these guys, they have $60 billion worth of Bitcoin. And as the price of Bitcoin goes up, the ARR goes down. And again, the leverage, the so to speak, leverage or multiplication keeps on dropping. So we want the price to go up. And in the last bull run, Strategy had a BTC reserve of over $100 billion. Now people are like, why was it only $100 billion? Well, at the last all-time high, they had 250,000 less Bitcoin. Why is this time different? Well, because they added, oh my God, imagine if they're on the spreadsheet, if we actually had something that told us what happened this year. So what happened this year? The BTC acquired year to date, meaning in 2026, is right here in the lower right-hand corner. They've acquired just in the first 9 months of this year, 167,947 Bitcoin. That's what they acquired just in this year. And somebody's going to be like, Grain, you got to talk about they sold about 6,948 Bitcoin. I'm like, they sold 6,948 Bitcoin and you're crying over that? They have net purchased 167,947 Bitcoin. I want to speak to everybody listening to me right now. If you know another major buyer that bought more than 168,000 Bitcoin, I want to hear who that is. Please tell me who that buyer is. And by the way, they should have a website and they should tell us every Monday at 7 a.m. what they bought, what was the average price, right? They should tell us that info, but we don't have that info. So this over here is awesome. Now somebody be like, well, do we know what they purchased every year? I'm like, oh my God, imagine that we actually had that information. Now on this page, again, can you read the dashboard? People are like, I don't know, what's a dashboard? I'm like, here, this is proverbially like your girlfriend or your wife is sitting next to you and you're like, did you need to buy in this year total Bitcoin? This doesn't show you the number change, but it went from 762,000. Let's make sure. Sorry, 2025. They had 672,000. Remember, guys, back in the olden days, December 31st of 2025, Strategy had 672,500 Bitcoin. They did not even have 700,000, right? So that's what? 27,500 Bitcoin there. Is my math right? Plus another 176,000. They've acquired 200,000 Bitcoin, right? And everybody's like, where do you get your numbers from? I'm like, it's right here, right? So when you look at this, that's your net gain. I just think that people are just missing the numbers. They can't read the website. That's why things are different. And Am I getting the numbers wrong, guys, or like is this all made up?
No,
Are we raising
sounds like you're
lunatics?
really tired of dispelling FUD out there, Grain.
Yeah, I mean, I hop on some interviews from time to time, and people are like, ask about strategy FUD, and I'm just like, at this point, I'm gonna use a Satoshi quote, like, look, if you don't understand, like, I don't have time to convince you. Sorry, like, I don't know, go short it, I guess. Like, um, yeah, some people are just, they don't ever want to get it. They have a vested interest in not getting it. They're engagement farming. I think a lot of it is engagement farming off the FUD. Um, and so you just like, you know, just gotta ignore those people. And I'm very excited to see, both the Strive team and the strategy team get back out to the institutional roadshows, talking to investors, getting on the more mainstream finance podcasts and TV shows and so on, and continuing to advertise this product. Because this product is, these products are primarily designed not for hardcore believers that understand things and have already spent the thousands of hours digging in. Stretch is primarily a product for people who've spent 5 hours learning about Bitcoin, and that's all they're going to spend, and they want reduced vol. And so they can't, the Strive team, the strategy team, they can't really be out there doing that while their product is broken. But once it's unbroken, then like they can go back out there and start like, getting the marketing engine going again. So, to use a car analogy, like when you have a flat tire, you can't go down the road, but their tires are getting aired up and they're ready to go again. And so I think it'll take a little time to repair some confidence, but who knows? Some green candles might, especially on Bitcoin, could really bring back confidence quickly.
Definitely. That's a really good point, Parker, about the roadshow. Like, yeah, Saylor, Matt Cole haven't really had, the opportunity to talk about these products, since they've, you know, gone, been able to suck in billions of capital. And if Bitcoin runs here, maybe it's next week, maybe it's a month, maybe it's 6 months, maybe it's a year, before we, start testing some really, crazy numbers again on Bitcoin's price. But Grain showed the chart. Strategy took off another almost 1% of the Bitcoin supply again, just off the market, basically permanently. They're selling a little bit here and there, but structurally, the supply squeeze is going to continue. More companies are going to emulate this strategy. Digital credit is going to continue to take dollars in for the people, like you said, Parker, who have spent 5 hours learning about Bitcoin. And yeah, it's going to be really exciting that there's like a new thing for Saylor and Fong to talk about at CNBC on Bloomberg and say, hey, this is the story. This is the 30-second pitch. People are buying it. Have at it. And the as we know, the market there is pretty big. It's pretty big. The amount of capital that would like the option to invest in these type of fixed income products. So, yeah, exciting times ahead, Grain.
Yeah, look, after a while, there's only so much you can do to convince people, and I think what I think is going to happen is next year, Saylor and Fong are going to get on CNBC or Fox or whatever the business show is, and they're going to be like, "Hey, Michael, how things going?" And he'll be like, "Oh, it's going great." And they'll be like, "Well, tell us why it's going great." Well, Bitcoin's at 150,000, and we're sitting on 1.25 million Bitcoins, which, as everybody knows, is 6% of the supply, which means it goes up 50% from here because they're at 4% of the supply now. And we've got $11 billion in cash, so our net leverage is zero. And yeah, that's how it's going for us right now. And we have a credit product that has $20 billion worth of credit it's called digital credit. And they'll be like, "Oh, well, people say that you've borrowed all this money." No, I just told you that our net leverage is zero, and we're sitting on $10 billion in cash, and we have a $150 billion worth of Bitcoin. And he'll just be like, mic drop, and they'll be like, "We don't get it." And I don't know how he's going to contain himself by saying, I don't know what I could tell you. You have the cash, you have the BTC reserve, you've invented digital credit, um, and digital credit is the weirdest thing in the world. And Parker, I want to hear your take on this because I was talking about this with Jeff, with punter Jeff. Um, right now, bonds. So bond math is as the price goes down, the yield goes up, and that's the same thing that exists for STRC and SATA, right? But the weird thing about this is that they're based on Bitcoin, which continues to go up. But the U.S. Treasuries, because we have $40 trillion in debt and almost a $2 trillion fiscal shortfall, and we have to money print, those are based on a devaluing dollar. So this is the weirdest thing in the world. They both use bond math based upon the face value and the yield, but digital credit is backed with an appreciating asset. But U.S. Treasuries and bonds are backed with a depreciating asset. This is the weirdest thing ever. And so, what did the Treasury announce? And this is what I was going to say before. Sorry, not the Fed. They're going to buy back the long end of the bonds. And everybody's like, oh, okay. They're going to do it on September 9th. They haven't done it yet. The announcement was they're going to do this. They haven't started it yet. So they're saying, hey, we got the money printer. We just ordered the paper for it and the ink. And everybody's like, oh my God, we have to front run the actual press being turned on, which is on September 9th. And so what happened is the bond yields have already spiked back up again to where they were before the announcement. So you're seeing guys like James Lavash, or other people saying, well, we need a bigger boat or we need a bigger printer because you got to double. So they said they're going to double the buybacks. Maybe they need to quadruple them. So that's the part that's already happened. I think that this is the weirdest thing is that digital credit is backed with an appreciating asset and the U.S. bond and treasury markets are backed with a depreciating asset. It can't get any weirder than that. There's the U.S.
Yeah,
debt.
Tyler, I saw this tweet. This was an interesting one. I
Right.
mean, look, ultimately, dollars are and treasury bonds are backed by the U.S. economy because the U.S. government can always, essentially extract from the U.S. economy. But I do believe, or I do agree that we are going to see structural dollar devaluation because that's the only way to eliminate the debt or at least reduce it and get it to something more manageable. Um, and B, I think, while maybe half the country hates Trump, um, I think like 80% of the country effectively likes his ideas. I mean, you looked at Trump 1, his ideas around, reshoring manufacturing and tariffs. The Biden administration kept all of that. And so I think whoever gets elected next, whether it's JD Vance or, God forbid AOC, but, whatever, people like her. I think they're just going to keep the same policies around reshoring, bringing manufacturing back, and all of that requires a weaker dollar. And so I don't think as dollars depreciate, I don't think people are going to, globally are going to park money in their local economies because, you look at China, you look at most of the developing world, and even a lot of the developed world now, especially in Europe, property rights are eroding. And so people want to store their wealth in a place that they feel like it's not going to get seized. And, you know, depreciating dollar, that's kind of like a slow seizure. So you're going to rotate from a USD denominated asset into something that's denominated, in something else, even though, Bitcoin and US equities are technically denominated in dollars, but they're backed by something other than, just straight dollars. And, they float with inflation and monetary expansion, all of that. So I think what you're going to just see is simply people rotating out of treasuries into other hard assets. You look at the 70s when the gold standard was eliminated and you had massive dollar devaluation. For a short minute, people were like, oh my God, inflation and dollar devaluation is really bad. And then this is when Paul Tudor Jones made a bunch of his money because, and I think, what's his face at um, Bridgewater talks about this a lot in his book. Like, that was the moment, smart money realized hard assets are going to rip. Any asset that has somewhat of a fixed supply, equities have somewhat of a fixed supply, typically, they're going to rip. And so anytime you see devaluation, all things are going to go up. But the beauty of Bitcoin is there's no PE multiples, there's no execution risk, I was tweeting about this, like, there's no city council halted development on my data center risk. Like, it's just a thing, right? And so I think gold, Bitcoin, these other hard assets that have no execution risk around them, they're the fastest runners when liquidity re-enters the system. And I think it's just like, it's inevitable. Like, the Fed has to print, otherwise they're going to blow up the banks, blow up the insurance companies, blow up the pensions, because when T-bill or treasury rates are going up, prices are going down. And that means balance sheets are getting smoked. That means pension funds are posting huge losses on a quarterly basis. Banks are posting huge losses. And remember last time we saw the long end blow out? 2023. This was the BTFP program. And, this is when Silicon Valley Bank broke. This is when Silvergate broke. You could argue why they broke, but like, holding a bunch of long dated treasuries was part of it. And so this is a little more like, I distinctly remember that I was in Utah. I was out with a buddy. I came home. I saw the news. It was on a Friday, and I just like pulled as much money I could into my Kraken account and smash bought, because I'm like, this is going up. This is a little more sneaky than that, because they're like issuing T-bills and buying the long end. And so it's like, well, they're not really creating. It's just like one to another. But I think it's going to have the same effect. And, I think we may look back on this time and realize this was the same BTFP program, just under a new name and maybe hidden a little better, but the end result is the same. Treasury yields on the long end are going to dump, meaning prices are going to pump because there's buybacks, and that's liquidity entering the system. So, here we go. Could be wrong, but I think they basically have to do this because banks are, suffering, pension funds are suffering, and it's crowding out funding for, the AI build out. It's crowding out funding for mortgages because, nothing trades inside treasuries from an interest rate perspective. So anyways, ramble over.
Yeah. Do you think, I guess, where do you think the incremental dollars to Bitcoin, in this moment are coming from? Is it momentum traders? Is it people who are just, seeing the signals at the treasury with the treasury buybacks, who are just saying, okay, Bitcoin's on again, risk is on even more, and that's the play here. And I guess, yeah, go ahead, Parker.
Yeah, what's interesting, like, you look at today, Nasdaq's actually down 77 bips, and S&P's down, like, equal weight is down, small cap is down. I mean, it's really crypto. It's really Bitcoin that is just flying here. And I think I'll look this morning. I was looking, gold was actually down a little bit too. Yeah, gold's still flat. Silver's up a little bit. So I think really what's happening is just a big short squeeze. Like, I think the leverage got really offsides. And so I think that's what is happening right now. It's just a bit of a reset. I think this last dump down into the, the 60s and the high 50s was maybe not a real price. I think the kind of the February, March levels of, basically 70s was kind of more the quote real price. And I think like fake leverage, or not fake leverage, but just leverage, pushed it down here. So I think that's what's getting blown out. But I think you may actually have some additional non-directional crypto leverage or Bitcoin leverage, and that is, and I have no way to prove this, but that is effectively AI leverage. And what I mean by that is you saw situational awareness blow up the fund. This was, a month or so ago now, and they were obviously super levered long. And brokers typically won't give you significant one-way leverage. Like you're just like, hey, I want to like triple lever long, um, Micron or SanDisk or some of the Neo clouds or some of the other chip guys. Like, no, brokers aren't going to allow you to do that. But what they will do with portfolio margin is they'll allow you to run a pair trade. So if you've got two correlated assets, Micron and SanDisk both go up together 99% of the time, they will give you a lot of leverage if you long one and short the other because you think, one's going to miss, one's going to outperform, whatever. And so I think what was happening is that Bitcoin had been trading a lot like the NASDAQ for much of 2025. And so these margining systems, they have a kind of a long look back window. They don't want to, respond to every tiny micro change in correlations because correlations are typically a little more stationary, meaning they don't change. And so these brokers were saying, well, hey, we'll give you lots of leverage, more leverage on your AI names if you short something else that's pretty correlated. Bitcoin. And so I think what you've had is, again, just a hypothesis. I think you've had a lot of hedge funds that have been long AI, short Bitcoin. And that trade is going to start unwinding for multiple reasons. One, it just gets overextended. These guys want to book some profits. But two, the brokers, as the correlation has now broken down, it's actually gone inverse. The brokers are going to start reducing the leverage that they're willing to, give out on margin, and then people are going to be forced to delever. And so, you're starting to see some really interesting, like early signs of this deleveraging. The last few days where they're actually trading at the inverse, and then the last month or so when the Nasdaq really rolled over and Bitcoin didn't really move. And I think a real canary, situational awareness was certainly a canary, but the real canary for me was Jane Street posting their first quarterly loss since 2016. And it wasn't a small loss. Jane Street posted a $15 billion trading loss. That is huge. Now they said, or maybe speculation was, a lot of it was tied to situational awareness, and they were a big investor in that fund, but they didn't lose 15 billion on a single investment in the fund, and the fund is actually still up, supposedly situational awareness year to date. I guess because of some of their private investments, and so I think what I saw was a circular from Robert, the CEO at Jane Street, co-founder, basically saying, hey, we're gonna like reevaluate some of our risk parameters and risk controls and kind of step back a little bit. And so what this likely means is if Jane Street was investing in a fund that was running this kind of pair trade, they may have also been running the same pair trade themselves. And so kind of degrossing is what you call it, where they reduce the size of their overall position. So gross position, you take your Bitcoin short, take the absolute value, and then add that to the absolute value of your long. And that's say 100 billion, maybe net is like 10 billion because you're long one and short the other. So degross, you sell the thing that you're long and you buy back the thing that you're short. So you bring maybe the net doesn't change, but the gross instead of 100 billion maybe comes down to 50 or 25. You reduce your leverage. And so I think that's like, situational awareness blowing up, and then Jane Street posting their first loss in 10 years basically is real telling that we may see a changing of the guard. And then the announcement on Treasury was just kind of the ignition to what was this pile of gasoline that was just sitting there. Does that mean we rip straight to 100? I don't think so, but I think this could be a real big confidence boost to basically cause retail to do the same thing that Jane Street and some of these other hedge funds are doing, which is effectively sell some AI names. It's getting a little overheated. It's getting a little hot. OpenAI is not going to IPO now. Maybe Anthropic's not going to IPO now. Their revenue run rate was a little lower than estimates. Like, maybe the trade's going to slow down a little bit and rotate into what's going to be the next hot thing, which I think is going to be Bitcoin. So it may take a little while for retail to catch up, but they haven't forgotten. They'll be back. And I don't know. I'm excited. There's gonna be chop. There's gonna be some up and down. We may see one more test down, but increasingly, I don't think so because I personally would buy any test down vigorously, which means, of course, that's probably not going to happen.
Of course. Yep, that's the signal for sure. But
Yep.
yeah, I mean, yeah, really, really interesting stuff. I'm curious. You guys heard the Metaplanet news this week. We talked about it earlier in the week on the show. They've kind of made their entrance into U.S. markets, and it's funny. I thought a lot of our show last week, Parker, where you talked about. There's a little bit of a comparison here where you talked about Tether potentially backstopping 21, by 21 potentially taking a stake in Tether, and I thought about your words there when I saw the Metaplanet news that they were taking basically a controlling interest, almost 95% plus interest in a U.S. equity entering the U.S. markets. They say they're going to launch some prefs. Um, it's interesting. They're only putting a little bit of Bitcoin, a couple thousand, into the treasury to start in this U.S. company, Superplanet. But I kind of view that as, Metaplanet's balance sheet is kind of backstopping this U.S. arm of their company. So that kind of echoed a little bit your I think comparison between 21 and Tether. It's a little bit different. It's not quite apples to apples. But curious of your guys' take on what Metaplanet's doing. Can they grab a meaningful slice of the pref market? Is a question we've asked for a long time here, and yeah, I just wonder what you guys are thinking about the moves they made there.
Yeah, Grain, you want to go first?
Look, I hope that Metaplanet is successful. I hope that this works. This is the right direction for them. I think that look, I think digital credit is real, and there'll be different implementations based upon the country you're based out of. So I wish them good luck with this. In terms of where their stock price is today, realistically, they just have a really bloated share count, and they're not very efficient compared to strategy. So with that, liquidity is the enemy of convexity. And what happens is, you just have to look at the total. I wrote a whole book on this that I published in January, and you compare it against the other companies that are there, meaning Strategy and Strive. And when you look at them, Metaplanet will have to do a reverse split. They will just have. You cannot attract. Let me take a look at their current price today on MTPLF. Give me 1 second. It was up, as a percentage of $1.68. Look, I don't set the. Most institutional investors will not touch a stock under $10, especially not under $5. They just won't. So they're going to need. And by the way, Strive and Naka knew this, and they had to do it. Now there's a difference between doing. And this is a really important thing. When I said this to a lot of people at the Bitcoin conference, their view to me was on stock splits was it does not change the percentage of ownership, and I'm like, right. But a forward split. So I bought MSTR at $19. People are like, but MSTR never traded at $19, and I'm like, that is correct. I bought it split adjusted at $19. When I bought it, it was $190. It never traded at $19. But Strategy did a forward split. Forward splits are rewarded because your stock price, it went from $190, it went to $1,400. Then the convexity was so high that the stock couldn't trade freely. So they did a forward split. They are rewarded for a forward split. These companies have to do reverse splits. Again, for Strategy, it did not change the percentage of ownership. But a split, if it's forward, is rewarded. Reverse splits means you issued too many shares and you lost your convexity. And so this is what we're seeing happen now with Strive and Naka. They're doing better. Sorry. And they're doing better as the price goes up because their stocks are higher. They can attract institutional investors into it. Now, I think Strive can do it, not necessarily Naka. I mean, I wish them well. I think they're probably in conversations to do that. And Matt Cole has already published this, that institutions have bought X number of shares. I think it was a month or two ago. So the problem, this is true for any stock. I'm not just picking on Metaplanet. Any stock below $10, they have a hard time attracting institutional investors. Now, you may have an asset allocator that is more like a proprietary trading firm or an investment firm, a boutique firm that does this, which Metaplanet does have. That's great. And again, I wish them well. But I think that my view, what I wrote is that Metaplanet will have to do a reverse split or of 10 or 20 for 1, get their share count under control. What that will also do is bring up the sats per share by the same ratio that it does it. And that will get them, that will change the convexity that goes to it, because they will reduce the liquidity. And people are like, why would we want to reduce liquidity? The word liquidity has at least 3 different contexts, and this is really, really important. Liquidity in a trading sense means, hey, can I book an order and the price doesn't change, meaning there's no slippage? That's one definition of liquidity. The other definition of liquidity is, hey, we're going to do an IPO, SpaceX, right? So the founders have exit liquidity and we can raise billions of dollars. And people are like, oh, the founders just scammed you guys and rug pull you by doing exit liquidity. The other version of liquidity, which came out yesterday, they're like, here's Grain with the word liquidity. It's got 3 different definitions. Yeah, it's context specific. What was the liquidity? The Fed is injecting liquidity into the long end by doing buybacks on the 30-year bonds. That's a different type. Again, so the word liquidity, and this is why I don't want to join spaces anymore, because they're like, well, it's all liquidity. I'm like, no, I just gave you 3 different contextual meanings of the word liquidity. How does this relate back to Metaplanet? Their stock, because there's 1.4 billion shares outstanding, has way too much liquidity. They need to reduce liquidity to have convexity. What's convexity? Price discovery. You don't have to buy my book. I just summarized it in less than 2 minutes. That's what it is. Strategy has the best metrics. Their metrics are sandwiched between NVIDIA and Netflix in the Mag 7 on a share basis per $1 million of share count. People are like, and somebody said to me, you can't make that comparison. I'm like, really? There aren't ratios that exist on the Mag 7. I'm sorry I'm going off on a tangent here, but this is very important. Apple, there's something called the PE ratio. This is very important for Metaplanet. The PE ratio, people are like, well, it's the PE ratio for an income producing company. I'm like, okay, is that the formula? They're like, yeah. I'm like, you're wrong. The formula is price over earnings per share. Here's Grain with being specific. It's price over earnings per share. Okay. So if you look at Google, has a 15 P over EPS ratio. Like, okay, so you pay $15 for every dollar per earnings for Google. Everybody's like, cool. Apple, it's 30. You're like, wait a second. You can look at it this way. Apple, you pay twice as much for every dollar on a per share basis as Google. So basically comparing the multiple to net earnings to EPS, because we have MNAV, that's how we compare these things. So for Google compared to Apple, you're paying twice as much. Then you got this crazy company, right? Tesla. Tesla has got a PE of 319, right? You just pulled it up right there, right? And these ratios, vary every day based upon the price. Tesla's 319, and let's look at NVIDIA, right? And let's just round NVIDIA down to $31.90. You're paying 10 times as much on a per share basis for each earnings per share. Grain's like, this makes no
Guys,
sense.
I gotta drop,
you're
but
saying.
good to see y'all.
Thanks, Parker. So this is the crazy part here. Why do you pay 10 times as much for Tesla that you do for NVIDIA? NVIDIA is the biggest company by market cap. They make the best GPUs, right? Tesla is 10 times as expensive. And I posted this 2-3 days ago, and I said, there are ratios. and some of them are in a tight range. If you look at, Meta through Nvidia, they range from 33, including Broadcom is 60, right? So they're in this range, right? You're paying for Broadcom, you're paying 4 times as much as Alphabet, right? That's the range. So that's how we compare it. So now when we get back to a Bitcoin Treasury company on the MNAV, everybody's like, all the naysayers like, well, it should trade at a below 1.0. I'm like, why? You're not giving any value to their ability to buy Bitcoin at a faster rate than 1-to-1. And so that's the part where you compare. So when I compare MetaPlanet, and I get that they're in Japan, but they also have a listed US security, MTPLF, I have to compare them against Strategy and Strive. And that's when I'm like, I think that their metrics are just off a bit. And this is the comparison I just gave you on EPS. That's how we compare income producing companies. And when we compare it on balance sheet companies, again, always on a per share basis. And people are like, Grain, you bring this per share up. And I'm like, it's called efficiency. And that's the big difference, right? And so with that said, I know that we've been at this for an hour. I want to leave on a high note. I'm going to share my desktop if you don't mind.
Yes, sir.
Yeah, give me a second here. So look, this is where we are. Let me see if I could blow this up. This, if you look at a weekly chart instead of a daily chart, the benefit of a weekly chart is it takes out some of the noise. And so from that perspective, what are the key numbers that I'm looking at? So on this, let's see, I'm looking for, I want to make sure people can read this. Let me see if I can blow it up some more. Yeah, now you can read it. What am I looking for here? The 50-week moving average is 82,000. I will tell you that when we get to 82,000 or 83,000, pick the number, somewhere around there, I will say crypto winter is over. And I've already posted this. So I have a real number for this. Now, the 100-day is interesting that it's a little bit higher. So that the 100-day is 88,000. I think by then, everybody will have basically flipped bullish, right? So my view is that we get to 82,000, 83,000, full speed ahead. I'm not saying that something stupid can't happen, right? Like they blow up an oil tanker or we make a pact with North Korea. I mean, just crazy crap can happen, right? But I think that this bounce, if I would have said, Tyler, if I would have said to you, back in the old days, like Monday, if I would have said to you on Monday, hey, we're kind of at, 63,000 Bitcoin. You think we're going to, have a $10,000 pump in 36 hours? What would you have said on Monday?
That would be very surprising to me.
You'd be like, Grain, I hope you're right. I hope you're right. Right. And the Fed's going to come out and say they're going to, but if we would have known that they would have going to defend the long end of the bond curve, right, then we'd be like, oh. And by the way, James Lavash, there's lots of people that have been talking about this for months. Larry Lepard, James Lavash, they've all been talking about this. And so Lynn Alden can't stop this train. I mean, you just put up, the U.S. debt and so forth. So, and then if you look at this chart, if we change this to a daily, we're above all the metrics. This green line right here, right? So you should be able to read it now. I like when I have to go up here, it always gets rid of the line. But, these metrics are 64,000. Sorry, I'll move it over so I can read it. It's 64,000, 66, and 68,000. So we're above the 50, 100, and 200-day moving averages. Now, they haven't crossed over yet. We want the yellow line to cross over the white line, and that will be a so-called golden cross. We almost had that back on, that almost occurred. Let me get the exact date. That almost occurred on May.
End of May.
Yeah, May 29th. What happened was Bitcoin had topped out at, again, we were looking great at the end of May, and then the beginning of June, everything sold off. Now, there is an old saying, sell in May and go away, right?
Yep.
And basically that's what happened. I mean, I've been hearing that same line for 15 years.
Yep.
So did I do that? Not really. So with that said, assuming that this continues, I mean, hell, we're at 72,400. If this thing, and I'm not talking crazy numbers, but we go to 82,000 at the end of next week, I don't see how somebody's going to say that crypto winter's not over,
Right.
right?
Yeah.
Am I making sense? I mean, because I
Yeah,
think that
makes sense. I think another sign you've tweeted about this too is, SATA getting back to par is an indicator. Okay, bull market's back. Stretch getting to par is an indicator. Okay, this thing can take off. It can accelerate, and I think that's right. Those instruments had to wait for Bitcoin's price, but once the dollars rotate back into the larger ecosystem, I think what we tested in May, if we can break through it this time, yeah, it's game on, right?
yeah, and we're looking at SATA right here, and they're doing this out to three decimal places, right? It's 99.993, right? So what do I think is going to happen? Again, you don't hear this word durable too often. We want to have a high MNAV, but the MNAV's got to be durable. We don't like to have this spike all the way up and spike back down because everybody's like, really, we get a spike every 2 years where Bitcoin does a 5x, does a 3x over 3 months. Everybody's euphoric, and then it drops down. I think that's the reason why we now have different cohorts able to buy Bitcoin now. You can have retirees buy it based upon this. And you're going to get the naysayers saying, well, Stretch made a promise to me that it wasn't ever going to go down. I think that you read that word promise was never used. That goes back to the whole speedometer analogy. People are like, we want to be transparent. You give them transparency, and then they're like, oh, I didn't want to be that transparent,
Yeah.
right?
Yeah.
Everybody's like, you got this big dashboard, you're driving down the road and you're whipping along 80 miles an hour, and your passenger says to you, you think you're driving fast enough?
Yeah.
You're like, wow, this is a really cool, 2026 vehicle that you're driving in with a 22-inch dash, LCD screen. Super cool. Until somebody says, well, you're driving, 25 miles an hour over the speed limit. Maybe you shouldn't drive that way, but I'm just saying, maybe you don't want that grief. So that's what people couldn't handle. The fact that the sailor gave that transparency. And then I think the other takeaway is people cannot read the dashboard.
Yeah.
And,
Yeah.
and
The info is all there. It's open sourced. Anybody can come in and track it real time. Strategies, reporting it in real time, essentially everything but the current week's Bitcoin buys in real time. But like everything else is out there and trackable. And yeah, what a great tool! Like it's like refreshing to see that level of transparency. I think, Grain. But yeah,
I'll
I
leave
mean,
you. This is it, and we'll wrap up, or you can stay, continue what you're doing. But this is an important part. When you look at this page, I don't do this. I used to do this. Hey, I've shown you this page. Tell me what you think is important on it. What I realize, we get an uncomfortable pause when I say that. So I no
mhm,
longer do that. What I tell people is, this is Strategies page. I did not create this page. Let me tell you what I think the most important metrics are. On this page, it's the BTC reserve is 60 billion, almost $61 billion, because that's a big number. That's the BTC that they have. That does not include the cash. Then what you have over here is you have your BTC break-even ARR, 2.82%. Why do I like that number? Because that's not the 12% number that everybody quotes.
yep,
Because that 12% number is based upon what they pay on STRC, which STRC is $10 billion. But that $10 billion is 1/6 of the BTC reserve. That's why this number is only 3%, less than 3%. So when I look at this page, I say like, oh, wow, that's the important number, is the 2.82%. So I don't even ask people questions. Now, the BTC credit over here, they then color coded this on the bottom, green meaning good, blue meaning like, oh, it's getting expensive, and then red means, wow, this is really distressed credit. And then the last thing is that when we look at the MSTR page, I look at this. Of course, I want, the number of Bitcoin. It's going to hit 1 million. The only question is when. The total, you have the reserve, the net reserve, right? The net reserve strips out all of the all of the prefs and debt. And then, so I like these metrics that they've done. The MNAV is positive. It's above 1. I think the reason why the MNAV is taking a little bit of a hit right now is because I think they're selling MSTR, and I think they're gonna be at whatever, pick a number. They're gonna announce that they bought Bitcoin this week. And by the way, I also post this, since they sold 7,000 Bitcoin totally this year, I bet they'll buy more than 7,000 Bitcoin is less than $500 million.
Yeah.
I think they're going to buy back all the Bitcoin that they sold, and they're going to add, pick a number, $500 million to the cash reserve. They'll do an even bill of this, 1 billion, because today's only Thursday. And people will be like, and then he'll be like, what do you guys think of that? The Bitcoin that we sold, we proved our point. We bought them all back. And people will be like, well, why did he sell them? He sold the bottom, and then he bought it back at a higher price. It's like, forget it. I don't need to go in spaces with the clowns. And then the other thing is amplification. As the price of Bitcoin goes up, amplification goes down, which means they're being delevered. And the same thing with net leverage. When they acquire, you're going to see, mark my words here, you could clip this. Their net leverage will be in the 2s. The handle. For the old timers that are watching this, it'll be a 2 handle. People are like, what does that mean? The handle is the first number. It's a significant digit. We'll have a 2 handle on the net leverage next week. You could book it. Grain of Salt said it, Mike.
Book it, guys. Follow Grain of Salt on X at Grain of Salt SF. Thanks for strapping in, locking in over an hour here, guys. Appreciate it. Thanks for all the comments, Sam Deepstar. Oh, I see Eve. Eve also just getting here late. He says, what do we make of STRC only trading at 95.6 despite the price action? I think it's just going to lag a little bit. I think, the sentiment shift is already been happening. Now with Bitcoin's price, stretch will follow. Investor confidence will come back. Shorts will melt away. I'm book the two handle on the net leverage. Grain said it. We're going to see more Bitcoin bought back. Hopefully all the Bitcoin they sold, plus some more cash stacked. I'm excited to see where this goes, and we'll talk more soon. You guys take care and stay orange.